Morning, Steve here in Chicago. Well, the USDA threw some numbers at the market, and basically what the USDA said was pretty much in line with the average trade guess. Because it wasn't at the higher end of the trade averages, we actually got a bounce in prices. Beans up 10 cents, wheat up 5 to 6 cents, and corn up 2 to 3 cents. So as far as the numbers go, the new corn yield is 173.4. The government was 174.4 last month. I still think we might go a little bit lower as we get further into the harvest. The bean yield is 51.4 versus 50.6, and I still think that could go up as we get further into the harvest. The carryout in beans, 395. The average guess was 413. The carryout in corn, 2320. Average guess is 2359. And for wheat, 1138, and the average guess was 1153. USDA did raise exports in the beans. They're now 25 million bushels versus the previous guess of 1985 and last year's 1936. Over in the corn, they've got exports now at 22.225 million bushels versus 2175. Last year was 1898. And for wheat, the new export number is now 975 versus 950, and last year was 775. So from a demand standpoint, the increase in these exports help offset a little bit the higher soybean supply. I've attached a chart. It just kind of shows since 2006 the monthly nearby futures for beans, corn, and Chicago wheat. The top number is the beans. The middle number is the wheat that is now slightly above corn, and the bottom number is corn. So the price is around 970 now in the beans, maybe 10 in the wheat, and maybe 350 in the corn. You can see we've taken pretty much all the weather premium out of the marketplace since 2012 highs. You can also see that we had a little bit of bounce in beans earlier this year because of the weather in South America. And right now we're thinking that this trading range could be $9.40 to $10 in the beans. Maybe in wheat, $4 to maybe $4.20. And in corn, $3.38 to $3.50. If we get to the higher end of the range, we probably could slow demand a little bit and see some farmers selling. And at the lower end of the range, we'll see the farmers stop selling and maybe pick up on some demand. For our Canada friends, they've had really some poor weather this harvest season. Right now it's snowing up there. And the last 25% of the wheat crop probably won't make the protein grade. That's helping the Minneapolis wheat more than it is the Canadian wheat prices. Also for canola, the delay in harvest, expectations is that's going to be bullish to prices. We have a lot of oil seeds in the world, but I think canola prices will follow the soybean prices. Down the road, we have to watch to see how much crops we have in South America, and then what kind of impact some of the outside financial markets are going to have with the threat of maybe a little of inflation out there and the threat of U.S. maybe raising interest rates. So again, USDA numbers in line with trade expectations, and we have a little bounce in prices. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.